Hey Bulls and Bears, how's everybody doing? Back with another dose of you know what. Hey, I'm out here in this wash today. We call it a wash here in California because most of the year it's basically dry, but it's rare to see it this full. Now, if you're not in California, this doesn't look unusual. It just looks like maybe a wet area, swampy area, but it's very unusual for California. We've had the most rain here. Some reports say we've had the most rain here in the past 2 weeks than we had in all of 2022. That's a lot of rain. There are people that needed to get rescued from their vehicles because the flooding got too high on some of the streets. There's, of course, mudslides, a lot more than usual. There's a flooding of homes, a lot more than we've ever seen before. And what's this going to mean? This is going to mean higher insurance rates for everybody. It's going to mean higher taxes for people here in California to pay for all this damage, billions of dollars of damage, flood damage, etc. So yes, this definitely has to do with economics, insurance, and taxes mainly. And some states are used to this type of water, but not California. Not prepared. The streets were not prepared. People were not prepared. Homeowners not prepared, especially. It looks like somebody lost their shoes. But something to think about is most people don't carry flood insurance for their homes. And that's one of the optional things when you buy home insurance. Typically flood and earthquake are going to be optional because not everybody needs those. In some parts of the country you never ever have to worry about flood or earthquake, but obviously things have changed this year here in California. All right, everybody, back in the studio here. Let's get into the financial economic news. Your money, my money, our money. And let's start right here. This is bank runs happening in the crypto world. Now, when we hear the term bank runs, we think about our financial institutions, our depository institutions, Bank of America, Wells Fargo, etc., your bank with your savings or checking account. But what's happening in the crypto world is major outflows of funds sitting in those exchanges. And there's a lot of panic and fear right now. Some people look at panic, fear, uncertainty as the best opportunity to come in and buy. You want to buy when everyone else is afraid, and when everyone else is buying, when prices are surging, that's when you want to sell. But there's a lot of fear happening right now. People are taking their money out of exchanges. We saw what happened with FTX. Well, that caused a lot of uncertainty throughout the entire sector of these digital, what some people call digital currencies. Other people say it's a complete Ponzi scheme. But it's interesting. People look at crypto and these digital coins, so to speak, as an escape from the regular banking system or from the regular financial system. And they looked at these as something outside of the financial system. But what we're seeing now is that regulators are coming in very heavy-handed against these security exchanges, and they're basically calling these coins securities. And that's why some of these exchanges are not going to survive this clampdown against these securities, what they're being called. But of course, the exchanges, they're saying, no, these are not securities. We shouldn't be regulated like stock exchanges and things like that. But take a look at some of this news right here. Out of the Times here, SEC charges crypto companies with offering unregistered securities. Folks, right here on this channel, we warned you about what would happen if they came in with these types of regulations, that there would be panic throughout the sector, that this could cause major price declines and even crashes like we actually saw. And what some people consider safe could change in the snap of a finger because of regulations and lawmakers and the SEC coming in and doing things just like this. The SEC charges Genesis Global Capital and Gemini Trust, and this is just the tip of the iceberg because we're seeing everything else happen on top of this. And in some cases, it's just the cost of living and people unable to make their minimum credit card payments that are causing them to take their money out of these exchanges, right? So we have a few different layers of reasons why people are pulling their money out of these exchanges. Also, what happened with FTX, of course, that was kind of the beginning of the panic. And here's another one from right here in San Diego. San Diego crypto bank Silvergate lays off 181 people amid run on deposits last quarter. And that, folks, was a reduction of 40% to its workforce. 40%. And this is out of the San Diego Tribune also here. And look at these outflows. Deposits plunged from nearly 12 billion down to 3.8 billion dollars. That's how quickly people are pulling their money out of this exchange. And a lot of these people are going to get laid off. Where are all these people going to go to work? Because when your experience is in a sector that's basically collapsing, it may not be easy to find work, maybe in fast food somewhere. And just since the beginning of the year, we did see a big uptick in the announcements of people getting laid off. And people that have been here on this channel, this is no surprise to anyone. When you have an economic boom that's based on easy money, lending, people taking on debts, people spending money they don't have, well, first that creates jobs. That creates the illusion of an economic boom. It creates what's chalked up as economic growth. But really, when people taking on debt is looked at as economic growth, what's going to happen when people, one, reach the end of their credit limit or the available credit, and two, what's going to happen when the cost of living causes people to pull back on other types of spending? Well, it's going to cause layoffs, job losses, and a major economic decline. And we're actually just getting started in this major economic decline. Another news story that caught my eye here: more than 500 laid off after a computer hack or a computer malfunction disables computers at a Pennsylvania cabinet plant. And apparently these computers are down for a long time, because instead of just being down for a few days and having people, out of the office for a few days, they actually laid these people off. So it was a major downage of these systems, it looks like. And, how long is it going to be before the entire banking system goes down? And you're going to see chaos overnight. And even if you have your funds out of the bank and you think you're safe because you have money out of the bank and you don't care if the banks go down. By the way, I did a report on that maybe last week called Banks Will Go Dark. And we talked about the FDIC out there talking about something that they're preparing for, a big announcement. So maybe go back and watch that video, Banks Will Go Dark, to get more into what we are talking about here. But yes, once the entire banking system goes out, even if you have money out of the bank, a lot of other things are going to close down as well. They won't be able to deliver mail without the computer systems being up, without the banking system being available. Once the banking system goes dark, the entire economy shuts down. Everything shuts down. And if you think you'll be able to just pay bills, through the mail, you may want to think again, because that whole mail system could be shut down as well. Now, speaking of debt, here is something that surprised me a little bit here. Daughter of Elvis Presley, Lisa Marie Presley, let me get rid of this pop up here. Dire financial situation exposed. Elvis's only child owed $3 million to creditors before she passed away. By the way, rest in peace, Lisa Marie Presley. So even the child of one of the biggest music stars of all time, Elvis Presley, couldn't escape this financial system that's based on debt and lending, right? And who knows what the story behind it is. I wasn't really into, whatever she was in, whatever she was. I don't know if she was an entertainer or what, or maybe she's just famous for being the daughter of Elvis. But whatever it was, maybe she led a lifestyle that she wanted to impress people. Maybe she had other problems that caused her to run up such enormous debt. But just look at this in general and just think to yourself, wow, the daughter of one of the biggest stars of all time, Elvis, in this much debt. What kind of world do we live in where this happens? And how do banks let people run up so much debt? So much debt, because once they're gone, these people, of course, are not going to pay back their debt. And, we ask ourselves why the bank would want to take on that much risk. Well, that's actually a rhetorical question. You know why? Because you know the answer and I know the answer. The banks can loan out this much money and take on this much risk because they know, I'll give you 3 seconds. 1, 2, 3. They're too big to fail, and they're going to get bailed out when there's enough people that can't pay back their debt. Also, on the topic of debt and spending, CNN came out with this: Americans are spending an extra $371 a month because of inflation. I think that depends on where you live. I know I'm spending a lot more than $371 a month. Even the fuel budget alone is more than $371 a month here for me personally. But what do you think about this number? Please let me know down below. Are you spending more than $370 a month versus just a couple years ago? Or are you spending less? Or is it about this number here for you? Please let me know. Something else that we talk about here on this channel that's really been in the news here lately is the wealth divide and how the rich continue to get richer. And it's interesting, the more money that's created, the more debt that's put out there, how most of it gets amassed by the top, fraction of percent of the population. The richest 1% of people amassed almost 2/3 of new wealth created in the last 2 years. Also, another warning here. This is out of the Telegraph over in the UK. Central banks risk setting off financial earthquake with constant rate rises. Well, then why are they raising rates? Well, they have to because runaway inflation. But it's not just about rates, it's also about lack of production and lack of manufacturing from so many companies, including in the United States. If we would just produce more, for example, all the money that the United States has been sending all over the world, think about if all that money would have been put into farms and specifically egg farms, poultry farms. You would not have the egg shortage. You would not have the rising cost of eggs. And that's just a small example of how spending can be changed to fix the problem of rising cost and inflation. So take that thought about the eggs and put that into any part of the economy that you want to, car manufacturing, anything that you have to spend money on. But a lot more people than have woken up already are going to be waking up to a very harsh reality financially, and it's going to cause us to go through some times that I think we've never seen here in our lifetimes. Now, maybe if you're 100 years old and you remember the Great Depression, maybe this would be just the second worst thing that you've lived through. But a lot of people out there say that's going to be worse than the Great Depression, right? Back in the Great Depression, more people were self-reliant, more people farmed, more people knew how to grow things, more people knew how to go out and get food on their own without having this whole supply chain where you can just go to the grocery store, swipe your plastic, and come home with a bunch of food to eat. So that's why I and a lot of other people think that what we're going to be heading into here in the very near future, actually it's happening now, we're just at the beginning, but 2023 is going to be a year of massive economic change for the worst, unfortunately, is what I think is going to happen. And it's going to get a lot worse before it gets better. So we need to buckle up, strap in, and continue to prepare for what's headed towards us here down this major bumpy road. We've got falling home prices, falling rents, both at the same time, which is another sign that people are getting strapped to the maximum financially. And more people are getting rid of their apartment that they may have lived in by themselves. More people moving back home. Mom and Dad, I'm back. Even though me and my roommate were both working 2 jobs, we still can't pay the rent. So can I move back into my room or back into my basement, depending on where you lived at with your parents? All right, everybody, thanks for watching this. Appreciate you being here. Please give us a thumbs up if you like what we talk about. Come back for more news, financial economic news. Also, thank you for sharing my videos. I had a video that actually did pretty well last week, and I think a lot more people shared that one versus my regular video. So please get the word out about this channel, about the situation that we're headed into, so more of us will be prepared. And I think us here on this channel, we're going to be way ahead of the curve here because we knew this was coming a long time ago, and we know that it's going to get a lot worse here going forward. So if you want to continue to be on top of things, come back to this channel. We'll talk to you very soon. Bye for now. Big love and peace. Talk to you soon. Bye.